Hi, I'm Kina Knisley, and this is The Life of the Land is in Its Real Estate with ThinkTech Hawaii. And today we're going to have a great show. I have Larry Gonzales with us from Aligned Mortgage. Hi, Larry. Welcome to the show.
Hello, Akina.
So,
Glad to
yes,
be here.
yes, I always love it when you're here. But just in case people haven't seen the previous show, go ahead and tell us a little bit about yourself.
Sure. So my name is Larry Gonzales. I work over at Align Mortgage. We are a local lender out of Waipio. We are the top VA lender in the state of Hawaii, and I've lived in Hawaii for 12 years. I was came here in the Navy. I served for 24 years, and decided to never leave this beautiful island. And now I do I do mortgage advising. Education is really what we are focused on to make sure that veterans understand their VA home loan benefit.
Great. So let's talk about the real estate market for a bit. So I do have some information. If you can go ahead and pop up that graphic. So this information was just released, and you can see that the average price point of a single family home is now $917,000. So Larry, can our VA buyers qualify for that much?
Absolutely. Matter of fact, because of the Blue Water Navy Act, which went into effect in January 2020, VA buyers can now go above the county loan limit and purchase really as high as they can income and credit qualify, up to and beyond, in some cases, $2 million. So absolutely, it's affordable. And a lot of the people who are buying homes and getting that median sales price up so high are veterans.
So that is awesome. And you see that our average sale price, which is a little different than our median sale price, the average sale price for a single family home has bounced up 20% in the last year from year to year. So from I imagine these are probably March stats to March 2020 from March 2019. So people have seen a growth in equity in their single family homes by 20%, which is just kind of amazing. Another kind of cool fact, I guess, if you're into that, or maybe it kind of scares people, we only have 1.4 months of inventory. So less than 45 days of inventory of single family homes on island. Meaning if we didn't, another house did not list for 1.4 months, we would have zero single family homes available on island. That's pretty low inventory for single family homes, which tells sellers if you're thinking of selling, it is a great time to sell, but it's a little rough on our buyers. So with that being rough on our buyers, what are our interest rates right now for our VA buyers?
So interest rates are still historically low. They've gone up about a half a point to three-quarters of a point from their all-time lows, and that was about 2.25%. But we're looking at about between 2.75 and higher. A lot of it depends on your credit score. Credit scores is a big impact on what your rate is going to be as a VA, well, any type of buyer. But we're looking at about a half a point to three-quarters of a point higher. But you take that into account. Last year our rates today are still better than they were last year at this time. Now in a couple of weeks they'll be about the same, maybe a little worse, but still it's something to consider. And last year, to go back to your days on market, or excuse me, your inventory. Last year we were at about 3 months of inventory at about this time. All right, so we had twice as many homes really for sale last year as we do now. And um, and that's, the fact that we have like 1.4 months. That is so low. And there's a lot of reasons for that. We'll probably get into that a little bit, but yeah, that's pretty significant.
Yeah, and the average days for a single family home, the average days on market is only 9 days. So by the time we're putting these on the market, they are going into escrow at an average of 9 days, some within 2 or 3 days. I know mine are averaging about 6 days. So yeah, so what we're seeing is they are just getting snapped up. So, if you see it, make an offer.
Yeah,
That's a,
and we're going to go to hours on market here pretty soon instead of days on market.
yeah.
It's that competitive right now. Yeah.
It's it is very crazy. So, and I love our VA buyers and they are struggling, but let's talk about that. You said that they did go up a bit and that we're probably going to see a bit of an increase in the next, month or so. What is causing that? What's impacting and causing that increase?
Well, yeah, I get asked this all the time. Where are rates going to be? And the answer to that is I have no idea. Nobody knows, but they are going up. And I'm a kind of the person who's going to say, you know what, expect the best, but prepare for the worst. And if I was a buyer, I would be expecting interest rates to go up, maybe up, up to a point over the next course of the next year, just to be on the safe side. You don't want to hedge your bets on the rates going down. Um, so they are going up right now. And why are they rising? They're going up. Well, a couple of things. One is inflation fears. We have so much money that's being pumped into the economy right now. We just had a $1.9 trillion stimulus package that was signed by President Biden. I got not even a month ago. They're talking about a $2 to $3 trillion infrastructure plan that's going to get signed into effect. So that's a lot of money being injected into the market. And then obviously the next domino to fall is raising taxes, right? So all these things are raising or increasing the inflation fears. Now I think most of these are short term, but who knows what short term is? 6 months to 12 months. The other thing to look at is the economy is recovering. Okay, the vaccine rollout has been a lot better than expected. Certainly not perfect, but it's going pretty good. And then you also have the stock market, right? Stock market has taken off. It's obviously slowed down a little bit at times, but it's still every week it seems like we're getting a new high. The stock market, the Fed is still injecting a lot of money into the economy too. All right, in the probably around $120 billion a month that they are using to buy treasuries and mortgage-backed securities. And they're going to do that because despite the economy starting to recover, unemployment, the number of people who are receiving unemployment right now or some sort of unemployment assistance is between 15 and 18 million. And a lot of those people are not going to go back to work over the next several months because especially if they're small businesses, they went out of business. They got no job to go back to, right? So the Fed doesn't care about it. The Fed's going to let inflation go higher, but they've been trying to let inflation go high and they just haven't been able to. So they're going to keep the short-term interest rates low. And I think that is going to help to keep interest rates from going too high. And at some point, they'll come back down. But the way I look at it, if you have an interest rate in 3% range, that's pretty awesome. That's really awesome, right? Last year, the beginning of the year, interest rates were about where they're at now, pretty close, a little higher. And we were having a great year up until the pandemic. It was, man, houses were going quick, but there was more inventory. It was gonna be my best year ever last year before the pandemic. And I think we're going to continue down that road. Houses are still going to be affordable and rates are still going to stay relatively low.
So yeah, so with what has history shown us? What happens when our interest rates do increase? Do our home prices drop? Do we sell fewer houses? What have you seen historically?
Well, when interest rates go up, competition for homes go down. Um, so because people are losing their buying power. So, 3 months ago, people had about $100,000, now about $50,000 more buying power than they do now because interest rates have gone up about a half a point. So as they continue to go up, fewer people will be able to, instead of seeing 30 people putting in offers out homes, which we're seeing right now, you might have 15 people putting offers on homes. It's not that bad because the rates still are super, super good. And homes are still really, really affordable. If they weren't, we wouldn't have 26 offers on properties, weekly, right? I think interest rates typically narrow, they thin the herd, but with a low inventory, it they they're still going to buy. There's just not enough inventory. That's the bottom line.
Yeah. The inventory is an issue. So let's go back and clarify that. So say our points, you say they went up from 2.25. What if they went up a whole point? Let's just say they took a drastic jump and we went from 2.5 to 3.5. How much buying power does a buyer lose with a 1 point difference?
So if on an $800,000 home, if interest rates rose 1 point, the difference in a mortgage payment. So let's say the difference in a mortgage payment is it's probably going to go up between $400 to $500 a month. That's pretty significant. Yeah. So and that's on an $800,000 home. Obviously, a smaller home is going to, a smaller mortgage is going to have a lower increase in the monthly payment, but that's pretty significant. Um, but like I said before, I mean, we've been spoiled really this last, last several months because the rates were so low. And they're still affordable. Again, it's going to thin the herd out, but there's still going to be there's a lot of people looking for homes.
Yeah. So we do work with a lot of VA buyers, and we did get one accepted yesterday. It was offer number 18. So for this buyer, he has been told no or rejected 17 times, but he finally got a yes. So I just continue to tell buyers, just keep trying, don't give up. But we do have a few that are saying, you know what, we're going to wait till next year. What do you tell those people when they think, we'll just wait till things get better or we'll wait a year?
I,
What's the
I have a program. It's called the cost of waiting, and there is a significant cost. All right, last year homes appreciated across the nation 10%. The housing report just came out. Case Shiller appreciation report just came out on Monday. Uh, San Diego, which is the big kind of metropolitan area that I equate Hawaii to the most, they were up 14% appreciation year over year. And we've been averaging about almost a point appreciation every month for the last probably 3 months. So there is a significant cost of waiting. So let's go back to that $800,000 home. All right. In a year at 10%, you're going to have to pay $880,000 for that same home. And if interest rates go up a point, you're looking at over a $500 a month increase in a mortgage payment for the same house you could have bought 1 year earlier. There's big significance in that. Um, so that's what I show people that, and there's a significant cost of waiting. And if you are here on military orders, you're not here indefinitely. So the shorter amount of time you have on island, the more risky the investment in buying a home is. If you have less than 2 years to left on your orders, it's a lot more riskier than if you had 3 or even 4 years. So tend to sit down with my clients and say, hey, let's talk about this, because the last thing I want for a client is to get in a position where they can't escape. They maybe because we don't know what is going to happen with the housing market. As much as we say, yeah, it's going up, it's going up. Hey, nobody predicted a pandemic, last year to last this long. I remember I was talking about in April or May, I was going to go on my vacation. You know, we really didn't have a full grasp of what was happening. So time is money, and if you give up now, it makes it you don't know what's going to happen in a year, and it's a little more risky from an investment standpoint to buy a home. And that's 100. That's you're talking you know 30 to 40,000 dollars a year you're getting right in BAH if you're active duty to invest in your home. And I did it. I mean, my first 6 years here, I lived in base housing, and I gave up $300,000 in BAH living on base housing. I didn't know. I didn't even know any better. It wasn't even a thought, but I could have afforded them. Now, I can obviously. I could when I was active duty, but I didn't realize it at the time because I didn't have the education.
So we are talking about, like I said, we finally got one of our VA buyers into escrow after 18 offers. What are some strategies that you are seeing that are helping VA buyers get their offers accepted?
Have money. All right. Have money. It's easy, right? Come on, everybody's got money. You gotta have an appraisal clause. You gotta have money for an appraisal clause. Um, and you can get that money through gift money through a parent, or a family member. And I've seen that a lot. Um, so the gift money, appraisal clauses. I think right now everybody has an appraisal clause. I've heard on the mainland, and I've seen it a couple times out here where they're just waiving the appraisal clause altogether, saying, "Hey, you know what? Whatever it comes in at, we're gonna pay this amount." And it's hard to beat that, right? But the appraisal clause is important, and a lot of people are like, "Well, if it appraises lower, I don't want to pay more than the home is worth." You know what? I now have another program that shows them based on expected appreciation for the year, how many months it'll take for them. Say the home comes in $15,000 below the purchase price, and they have to pay $15,000 out of pocket. In this market, in 3 to 6 months, they will have passed that in the amount of equity they have in the home, or in the value of the home. So it's just the market. It's not a risky investment, especially if you have more time, where the military is going to pay your mortgage for you, or if you're going to hold on to the home, your renter is going to pay your mortgage.
Yeah, so that brings me to my next question. Say they do pay over the appraised value, and maybe the market does take a shift. And what happens then? What are some outs that some of these VA buyers have in 3 to 5 years? What are some suggestions you have for them?
Well, in 3 to 5 years, you should have amassed enough, appreciation to where if you really want to sell, you could sell it. But I would also say, um, you have you can rent it. With rates as low as they are right now, you should be able to rent your home. And here's the other thing: the cost of houses is going up. The cost of rent is going up too. It's hard to buy a home. It's even harder to rent a home. All right. Um, I mean, we have you have clients that they they've been 18 offers on a home. There are a lot of who don't even get to 18. They get to two or three, and then they quit and they want to go rent a home. Well, they're harder to come by. So I know in my house, I could raise my rent on my rental unit $100 a month every year. That's pretty significant. And housing, there aren't we're not building a lot of houses on the island. We're not building enough. So um, so I think really you're kind of protected because cost of housing goes up, so does the cost of renting.
Oh, all right. So, what about I've had clients ask me if they should make extra payments. Do you recommend that our VA buyers make those extra payments to kind of make up for the fact they paid over the appraised value? Does that help?
It depends on your time frame. Well, it depends on what you're going to do with the home. Um, if you aren't going to own the home for more than 3 to 5 years, then probably not. If you want to get enough equity in your home so that you can refinance out of your VA loan into another loan product, then yeah, it does make sense because you want to keep the home as an investment property. So, and that's what I did that on one of my homes out here. I paid it down to the point where I could refinance out of my VA loan, and then I used my VA loan for another home. So, you, yeah, it makes sense, but it doesn't make sense for everybody. Right now, uh, the interest you're paying on home is 3%. You should probably be, you could throw it in an index fund and make 10% return. So it doesn't make sense for everybody, but for some people, it absolutely does.
Okay. All right. So let's go ahead and touch on the no foreclosure moratorium. Um, where are we with that?
I think it's been extended to June, but I also think that it will be extended again. You know, we our president. I just don't see him saying, you know what, you guys who still don't have jobs and still can't pay your mortgage, see you later. I don't see him saying that. He's not going to do that. So I think they're going to continue to kick that can down the road, probably to the end of the year at the very least. And you got to remember, Hawaii's been hit by unemployment more than anywhere else. Just because so much of our industry is tourism and service. And while the jobs report came out, it came out today, came out today or yesterday. Jobs report was really good. It was like the first really good jobs report I've seen in a while. Um, but there's still a lot of people unemployed, and people who can't pay their mortgage. It's not like obviously there's always a few who are just I'm not going to pay my mortgage, but most people want to pay their mortgage. This is their home. This is their investment. This is their livelihood. 83% of retirees' income comes from their real estate. So they don't want to lose that home. So I think that can is going to get kicked down the road a little farther, so and allow folks to recover. I think that's the right thing to do. Now, I don't make that decision, but that's just me, being a positive human being.
Yeah. So I know a lot of us are wondering, what is the impact and what can we expect to see? Are we going to see a lot of foreclosures? Are we going to see a lot of short sales? And as you said, we don't have a crystal ball, but
No, but I will tell you this: in 2008, 2009, we had a lot of foreclosures. Government didn't bail everybody out. People just gave up. So this is not 2008 or 2009. 2008, 2009, housing market was the cause, of the Great Recession, right? Is that what they called it? I can't remember now. But that wasn't it. The problem was lending. If you fogged a mirror, you could get a loan. All right. I fogged a mirror. I got a loan. I didn't give up when the value of my home went down. The other thing though is 2000. That time frame from 2003 to 2008, we were building so many houses. There were like 4 houses for every buyer. So there weren't even enough buyers for all the houses that were built. Now we are at a point now where our millennials are buying homes and in larger numbers than we've seen probably since the end of World War II. All right. And there are simply not enough homes for all these millennial buyers and everybody else who wants to buy a home to buy. There's just not enough homes. So that's why these prices are going up. And that's why I think the housing market is going to stay pretty solid for the next couple, 2 to, heck, 5 years, because we just are going to have so many people coming into the market, and just nobody can build fast enough, especially on the island, especially here. It's pretty tough to get a permit to build a house.
it is
Yeah.
there. Yeah, there's no more space left to build a
Yeah.
house. So I want to close with, so do you still recommend that VA buyers use their VA? So we had a show on this, whether using their VA loan to buy investment properties, like ones that have multi-units. Is that something you would still recommend a VA buyer do?
Absolutely. Absolutely. So I had an E6 in the Navy just buy a 4 unit, multiplex. And he was able to, because he had experience as a property manager, he was able to offset the income required with the rental income that he had from the other 3 units, and he just had to occupy one of them. And that's kind of that's an extreme awesome one. But if you are dual income, you're getting 2 BAHs, and you absolutely should be looking for something that has 1 to 2 rental opportunities within. And I've done a lot of those over the last year and a half. That is a great investment because, again, go back to what I said before, it's really expensive to rent. And so I definitely recommend, because you only have to use one, especially if you're dual military, you only have to use one entitlement to buy a home. You still have this other one that you can use somewhere else.
Yeah.
So, and even if you only have one entitlement, would you rather use your no money down entitlement on $1 million home, or excuse me, would you rather pay 5% down payment on $1 million home or a $300,000 home, right? You want to use your down payment where you have to go, say, conventional on your lower priced home. So use your VA benefit on the higher priced one.
Yes, definitely. So let's go back and clarify. You said this buyer had landlord experience.
You did.
Can you rent out a room in your house? Does that count as landlord experience?
No, it does not. You have to. It has to be. You have to have. It has to be reported. He did not have it in his taxes, but he got a letter from the owner saying that he had done property management for them for 2 years. So and you have to have 2 years. If you have a rental home, if you have a rental and you've documented that in your taxes for 2 years, then you should be good to go.
Okay.
Yeah.
All right. Well, thank you so much. Is there anything you want to add? Any tidbits?
I say just don't give up. It's tough. You just said you had a client. It was his 18th offer. I've had several who've gone over 10 offers. I just had one just amazing couple find the home. It was their 14th offer, and it was the right home. It was the right home for them. It's a beautiful home, and I think you just don't get too discouraged. Don't give up, because this is a very good investment, especially right now, despite what your friends in base housing might be saying. um, it's a pretty solid market. And again, historically over the course of time, homes appreciate actually it's going to be over 6% now, but 6%, at least 6% a year in Oahu. That's a pretty good investment. All right.
Yes.
That would be my guess. If you have any questions, also don't hesitate to reach out to me. We actually have a VA home loan seminar. It's actually next Saturday, so it would be April 10th at 10 a.m. We have a free VA home loan seminar, and you can go to my website larrythelo.com and you can sign up for that, and we'll educate you on your VA benefit. I wish I would have known about it when I joined the military 30 years ago now. Whew, getting
Yeah.
old.
Wow.
Yeah.
All right. Thank you so much. And thank you for joining us on The Life of the Land is in Its Real Estate on Think Tech Hawaii. And I will see you all in a couple weeks. And we're going to talk about asset protection. So I will see you all then. And thank you so much, Larry. Have a
All right.
great
Thank
day.
you. Aloha.